All right, so you're thinking about diving into crypto, huh? Well, today we're going to help you figure out which strategy might be right for you.
Yeah, it's a pretty exciting time to be in the crypto world.
Definitely. And there are so many different ways to approach it. But two of the most popular strategies are day trading and HO dealing.
And they really do seem to appeal to different types of people.
Yeah. Like, what kind of investor are you? Are you
Hmm.
the type who thrives on the excitement of risk, or do you prefer to take a more long-term approach?
Right. It's almost like the difference between someone who loves playing poker and someone who's more into a game of chess, you know?
Okay, so let's break these strategies down. First up, day trading. It's all about trying to profit from the short-term price swings that happen in the crypto market.
Exactly. Day traders, they're constantly monitoring the market, looking at charts and indicators, things like moving averages and RSI.
So they're making multiple trades, sometimes even in a single day, just to take advantage of those tiny little price fluctuations.
Yeah, it's fast-paced, high-stakes stuff. I've even heard about some day traders who use algorithms and bots to make their trades.
Wow, that's next level. That makes it sound super intense.
Oh, it is. It definitely takes a certain kind of personality and a high-risk
So
tolerance.
it's not just about luck then.
Definitely not. Day trading, it takes skill. It's not something you can just jump into without any knowledge.
Right. You need to know what you're doing.
Absolutely. You need to be able to read the market, understand technical analysis, and have a solid strategy in place.
I imagine it can get pretty stressful too, right? Like constantly watching those charts and worrying about making the right moves.
Yeah, that's the trade-off.
Yeah.
The potential for quick profits, and it comes with a lot of pressure. Day trading, it can be really all-consuming.
Okay, so on the other end of the spectrum, we have HODling. What's that all about?
HO dealing, it's all about the long game. It's about believing in the underlying technology and the future of cryptocurrencies.
This is more about patience than trying to time the market.
Exactly. Also, dealers, they're not phased by short-term dips or fluctuations in the market.
They're in it for the long haul.
Yeah. They believe that over time, cryptocurrencies will increase in value, and they're willing to wait it out. They're just holding on to their investments and waiting for the market to grow.
So if day trading is like sprinting, then HO dealing is like running a marathon.
Yeah, I like that analogy.
Okay, so now that we have a better understanding of what these two strategies are all about, let's dive into the pros and cons of each.
Sounds good.
Starting with day trading, what are some of the biggest advantages?
Well, obviously, the main advantage is the potential for quick profits. In a market as volatile as crypto, a skilled day trader can make a lot of money very quickly.
But on the flip side, there's also a lot of risk involved, right?
Oh, absolutely. Day trading is extremely risky. You need to have deep knowledge of the market, a strong risk management strategy, and the mental fortitude to handle losses.
Because let's be real, losses are bound to happen at some point.
Oh, yeah, for sure. It's almost inevitable. And that's something that a lot of new day traders don't really understand. You need to be prepared to lose money.
And not just be prepared mentally, but financially too.
Yeah, exactly. You should never invest more than you can afford to lose. That's rule number one in any kind of investing, but especially in day trading.
Okay, so what about the pros and cons of HO dealing?
Well, with HO dealing, the main advantage is that it takes the emotion out of investing. You don't have to constantly watch the market and stress about every little price movement.
It sounds a lot less stressful than day trading.
It definitely can be. HO dealing is more about having a long-term vision for your investments and trusting in the overall growth of the market.
But of course, there are some downsides to consider too, right? Like,
Right.
what if you miss out on some big short-term gains because you're holding on to your investments for the long term?
Yeah, that's definitely a possibility. And you also need to be comfortable with the fact that the market can be volatile. Even if you're in it for the long haul, there are going to be times when the value of your investments goes down.
So it's not for the faint of heart either.
No, definitely not. But it does require a different kind of mindset than day trading.
So there's no clear winner then. It really depends on your individual circumstances.
Exactly. It all comes down to your personal goals, your risk tolerance, and how much time and effort you're willing to put in.
Our source did mention something called a hybrid approach, though. What do you think about that?
Well, a hybrid approach can be a good way to balance the pros and cons of both day trading and HO dealing.
So what, like maybe having a core portfolio of long-term investments that you HODL,
Right. And then a smaller portion of your capital that you allocate to day trading.
so you can kind of dip your toes into both worlds.
Exactly. It allows you to potentially capitalize on short-term price swings while also maintaining a long-term investment strategy.
It's like having the best of both worlds.
Exactly.
Now, regardless of which approach you choose, there are some universal pieces of advice that apply to anyone who's interested in the crypto space. Our source highlighted some important pro tips for success.
Yeah, these are great tips no matter what your strategy is.
So what's the first one?
The most important tip is to manage your risk. Only invest what you can afford to lose and make sure you diversify your portfolio.
That's good advice for any kind of investing, really.
Oh, definitely. Don't put all your eggs in one basket. Even if you're really bullish on a particular cryptocurrency, it's important to spread your risk around.
Okay, what else?
The second tip is to master your emotions. Trading can be an emotional roller coaster, and it's easy to get caught up in the hype or the fear.
Especially in a market as volatile as crypto.
Exactly. But it's important to stay level-headed and not let your emotions dictate your trading decisions.
So don't panic sell when the market dips, and don't get greedy when it's going up.
Exactly. Have a plan, stick to it, and try to stay objective.
And lastly,
Lastly, never stop learning. The crypto world is constantly changing, so it's crucial to stay up to date on new technologies, regulations, and market trends.
keep learning and keep evolving with the market. So as we wrap up this deep dive, I'm left with a really interesting thought. If HODL was originally just a typo for holding, does that accidental term tell us something about the crypto world?
Mm.
Like, does it say something about the emotional resilience that's needed to succeed in this space?
Yeah, that's an interesting point. I mean, it does take a lot of patience and determination to hold on to your investments through the ups and downs of the market.
Right. To not panic and sell when things get rough,
Yeah,
it almost feels like a badge of honor to say, I hodled through it all and came out on top.
I think you're onto something there.
So to all of you listening, remember, there's no one right way to approach the crypto world. Do your research, manage your risk, and find the strategy that best aligns with your goals and your personality. Whether you choose to day trade, HODL, or try a hybrid approach, the most important thing is to stay informed, stay curious, and most importantly, stay safe out there. Happy investing.
Yeah, and good luck.